Welcome to Charts Today, European Opening. My name is David Linton, and today's edition for Friday, the 9th of November, comes to you from London. And we start by looking at the dollar. In fact, we've seen markets selling off quite heavily, and the dollar rising on the Federal Reserve hawkish comments, and the market now almost certainly seeing an interest rate rise in the US in December. So that higher interest rate rise is pushing the dollar higher, and of course is having an impact on markets generally. We're seeing the euro sinking lower against the dollar, back to bearish territory. Japanese yen was a multi-week lows against the dollar. Yesterday the dollar was hitting, I think it was 5-week highs, and we don't have much work to do to then be starting to see 2-year highs against the yen. So dollar strength is still very much the theme. Sterling falling into the bearish trend on the short-term chart against that stronger dollar, and against the euro, sterling actually holding on to its gains, still looking bullish there against the euro all round. Against the Swiss franc, just flattening off on sterling, and against the Aussie dollar, actually in bearish territory with the Aussie dollar rising in sympathy with the US dollar. Bitcoin is actually just back into bearish territory on the short-term chart. Really can't make up its mind at the moment, and has been running sideways for quite a few months. We mentioned yesterday that markets are looking were looking strong at the opening, but they actually then started to come back. We saw the S&P 500 lose most of its gains in the day, and the Nasdaq also. These markets are actually in bullish. The US indices are in bullish mode short term, but we are just starting to see them running out of steam. So quite interesting there. And we're seeing the futures off today. We're seeing the S&P future off 1/3%, the Nasdaq E-mini off 0.5%, and we're seeing the FTSE future due to open in a few minutes. We're down 0.4%, and the DAX down 0.4% as well. The FTSE was up yesterday 1/3%, but it looks like we're going to unwind that today at least. And mid caps were looking a little bit better, but still just the medium and long term charts are still quite worrying there. The CAC 40 was actually the strong performer yesterday, and it's the only market really in Europe that has held on to its medium term trend. We're seeing Japan down 0.6%, the Hang Seng index down 2.5%, really big falls there, and we'll look at the stocks in a minute. And the Shanghai Composite down 1.4%, continuing its big falls. We've gone from 3,500 to 2,500 this year, so we're seeing a massive re-rating there. India was down slightly. The Aussie market was also down very slightly. Crude oil struggling, still making new lows, and now just at $70.50, and WTI at $60.50. So, and with downside targets. US nat gas holding on to its gains at $3.57. So we are seeing here that pushing higher on all fronts, looking very strong indeed. Gold falling back into bearish territory on that strong dollar, sitting at 12.19. And if we look at silver, much the same picture there. US 10-year yields sitting at 2.2%. They were nudging 2.25% yesterday on those Fed comments. We're still bullish on all three time frames. And German bonds are up this morning, but the Bund is actually still in bearish territory on all three charts. We saw Amazon down very slightly yesterday, probably the best performer of the tech giants. Apple, still a big concern, was down 0.69%, and Alphabet, Google, was down 1%, and Facebook down a massive 2.4%, well below that critical 150 mark. This data all coming to you from Thomson Reuters Icon, or if you're a private user, Metastock Zenith. But now we're looking at data coming from the Yahoo feed in Europe. So if we take a look at Asia, first of all, we see here the indices down in Asia, the Nikkei down over 1% now, Hang Seng, as we mentioned, down 2.5%. So these charts are all looking pretty scary indeed. And in the region, in Asia Pacific, we're seeing pretty well everything much lower. Looking at the individual stocks, the Aussie market, we're seeing there were some quite good rises. G8 Education up 11%. That's taking them into bullish territory on the short-term chart. Sigma Healthcare up 5%. but we're looking at really massive underperformance on that chart. Looking on the downside, we did see Lend-Lease down a massive 18% and corporate travel management down 8% in the Aussie market. Looking at the Indian market, the Nifty 50, we've got Hindustan Petroleum up 4.7%. Yes Bank continuing their recovery off this massive fall, we're up 4%, and we're seeing here the price seesawing there. Big question is, can they recover? Asian Paints up 3.8%, and if we look on the downside, we see Infosys down 2.5%. So not everything rising, still a very big mixed picture. That long-term trend starting to crack and come under strain, and we see the relative to the Dow Jones index, we're seeing that falling away as well. China, only 4 stocks rising in the Chinese market, so just an indication of just how bearish things are. Bank of Shanghai down 4.95%. Chinese banks down very heavily. Chinese Merchants Bank down 4.6%. Agricultural Bank of China down 3%. And we're seeing really the banks, industrial bank, are the worst performers in the Chinese index. The Hang Seng, not a single stock up. So that just gives you an indication of how heavily we're seeing things selling off there. Tencent, for example, down 5%, and really just continuing its massive sell-off. So we are seeing some big falls in the region. Japan looking better. There are some rises, and but we do still have some pretty big falls. Nikon down 10%, Chigoda down 15%. So it is still a very mixed picture there in Asia. So yesterday in the FTSE 100, we saw the top performers were Coca-Cola up 5%, AstraZeneca up 4%, M&S actually recovering nearly 4% higher, and strangely putting them back into bullish medium-term territory after their results. But they have underperformed the Dow by 10% this year. Still got lots of downside targets. We may, and a new upside target. That upside target was set earlier this year, which has been activated. So we may be seeing a turnaround, but it's not yet showing up in the long-term chart. There has been steady buying on the on-balance volume, so M&S is an example of something that actually might be near the bottom, but it'd be a brave person buying retail stocks right now. Micro Focus were up 3%, and Next were up 2% yesterday. Looking at the downside, we saw BP were down 2.8%, Paddy Power, and Sage's woes continuing, them down 2%. And still in long-term bearish territory, and having underperformed the Dow Jones index by over 30% this year. Taking a look at the FTSE 250, we saw yesterday that Sophos Group was up 9%. Hilton Pharmaceuticals up 5%, and JD Wetherspoon recovering a little bit from their downbeat trading update the day before, were up 4%. And if we look at Inmarsat, they were down 7%. Talk was down nearly 4%, and Superdry's woes continued down a further 2.86%. Across Europe, we had again some quite big performers. We had Wienerberger AG, they were up 6%, and Commerzbank up 5%. So we're seeing that there. Wienerberger, interestingly, is in Vienna, and this is looking still bullish on the long-term chart. And if we look at the downside in Europe, we did see some quite big fallers there as well. We had Inmarsat down, as we said, 7%, and most of the fallers were London stocks, so we did see London being hit quite hard. That's it for today. Until Monday, happy charting. See you then.